which is institutional sponsorship. So when we talk about institutional sponsorship, I want you to think about an elephant. Okay, I want you to think about an elephant. Why an elephant? Because an elephant is a huge mammal, an animal, and when it gets into a room, it cannot hide itself. Yeah, it cannot hide itself because it's so big. Yeah, it's so big that it cannot hide itself. So when we talk about institutional sponsorship, it's basically identifying when the smart money has entered the market. Yeah, identify when smart money has entered the market. And how do we know that? We know that by looking at the candles, because there's no way you can tell that they are in the market. The only way you can tell is by looking at the candles. Okay, so for example, let's go on to any pair. Let me think of a pair that has got let's use pound Aussie. Okay, and let's go on to the daily. Now remember, I did give you some reference points. I gave you a reference point, which is an old high, a last up candle, the last down candle, and then an old low. Okay, those are your 4 reference points. So when we want to see if institutions have entered the market, these are the 4 areas I will know they are, or identify them being in the market. So let's say price is at a last up candle. Okay, this is the last up candle. And then price is coming up. Okay, as price is coming up, they will be leaving what? Down candles as a buy for reaccumulation. They buy, down candles, and then move away, down candle, and then move away, down candle, and then move away. Okay, till we get to this last up candle. Once price gets to this last up candle, what you want to see is smart money going to come in and send price back down. Okay, because if you don't see their footprint in there, it's not showing you that they are in the market. Okay, it's indicating that they are not coming in, and for them to come in, it has to show you proof. And the way to see the proof is there is going to be a sharp move away from that level. Okay, there is going to be a sharp move away, and then that sharp move away usually breaks a down candle. As price is going up, it will usually break a down candle. So as it's coming up to this last up candle, as soon as you see a sharp move come in and break a down candle, that's indicating that there is an elephant in the room. There has been the presence of an elephant. That's how you know that smart money has come in the market, and that's what we call institutional sponsorship. Yeah, the institutional sponsorship, they have come in. So then going forward, you can start looking for price to retrace and then continue going down. All right, that's how we identify institutions in the market, because if they are coming in the market, they have to show their footprints. They cannot hide it. Because of the vast majority of their orders, they can't hide it. Yeah, That's the nature of their business. Their orders are too big, and once they hit the market, it causes, it's like, let me see if I can find elephant in the pool, elephant in the room. Okay, see, let's say this one. That one. Right, when there's an elephant in the room, it's just so obvious, it cannot hide itself. Yeah, it's just so obvious. Like, how can it hide? How can it hide itself? It can't. It's so obvious, right? And that's how you're gonna see institutional sponsorship on the chart. Once they come in the chart, their presence should be so obvious, and the way you see it is the magnitude, how price moves away from the level. So the levels are what I've mentioned: the last up candle, the last down candle, above a swing high and below a swing low. So when they do hit these levels, you want to see the move away. Yeah, you want to see the move away. So in here, okay, below this low, below a swing low, as they tapped it, the move away is indicating that smart money, or there has been an elephant in the room. Okay, so then we trace it all the way back to the last down candle prior to the move up. That's where we start. That's their footprint. Okay, that's their footprint. So we wait for price to come back there and then push higher. That is one way. The other way is if they run a stop, like here. Yeah, they run a stop and then they reject. Okay, once they reject, they move away from the rejection. If it's not, let's say something like this. Okay, after running the stop, they go up, come back down, go up, come back down, go up before breaking this high. That is not smart money. Yeah, that's not smart money, because if it was smart money, as soon as this low is taken and they reject, it has to do what you see here: quickly reject and go higher, because they don't want to spend time down here. Right, they don't want to spend time down here. They just want to get their business done and move on. So the quicker they move away, that is indicating that smart money has been in the market. So we identify for this kind of trade, we identify this, the last up candle, okay, is the reverse of the down candle breaking. So it's the reverse of what the 1 hour is doing on the Aussie New Zealand. So we identify that, and then we look for retracement, and then we can buy it. Okay, so this is what we call institutional sponsorship. We want to see a quick move away from a level. So the levels are the last up candle, the last down candle, below a swing low, and above a swing high. So if we go on to pound yen and we go on to the weekly, let's remove all this drawing. Okay, and then look at this last up candle. Okay, when price did hit this, the move away here is indicating that smart money came in, because as soon as it hits it, rejection, and then the next candle fired down. Okay, so this move down is indicating that smart money was there. So we identify our last down candle. In this case, we had 2 of them. So this last 2 up candles, and then we draw a line, and then we wait for them to come back, because they will come back. And then once we get back there, we look for what? reasons to go short again. Okay, so that's how we use the institutional sponsorship for you to know that smart money was in the market. So if you're looking for smart money footprints, you will find their footprints above a swing high, below a swing low, at a last up candle, or at a last down candle. So for example, as price is coming back down here, yeah, this is a last down candle prior to this move up. Right, this is the last down candle prior to this move up. So as price is retracing, let's say I'm looking for a buy. Okay, let's cut this thing off. Let's cut this one off. Right, so I identified this. There was a quick move away, so I say, okay, I tell myself smart money was in the market, so if they come back down here, they're going to do what? They're going to buy again. So as price is coming back down, I'm not going to blindly just say, okay, because they were in the market, I'm going to buy. No, what I'm going to do is I'm going to wait for price to hit the level and then see if they will be in the market, because as it's hitting it, it doesn't guarantee that they're going to come back in. Yeah, they are not obliged to do that. So you wait for price to hint to you that they have definitely come in. So as price is dropping, yeah, this hit, I want to see a quick move away to break an up candle, because if I do see that, that's tipping their hands to me that they've come back. Yeah, that's tipping their hands to me that they've come back. So if I do want to buy, then after the break above this high, I can go in and start buying. If I don't see that, it doesn't show me that smart money is in the market, because I want to see institutional sponsorship in my trade. So the way you see it is the quick move away, breaking, and then retracement. That is your institutional sponsorship. So this move away is the institutional sponsorship. The harder, the better. Okay, so if I just get rid of these lines and I play this, okay, I'm still waiting. Are they in the market? No, because they've not broken, okay, above that swing high there. Okay, because I want to see them break it. That's them, because they sold here. Yeah, they sell with up candles, so they sold there. That's what caused price to drop quickly. So for them to commit to buying, they have to break where they sold. If they don't break, it means that they are not willing to buy again. So price then plays around, and then as you're watching it, you're gonna see if they step in. Okay, so as I'm playing it, if they step in, you're gonna see it. Okay, taking long. Yeah, so now where I am, do you see smart money in the market? If you don't see it, then that's fine. Over time, you will. But right here, look at this high. Right here, that's a commitment, because if they are willing to continue going down, they won't break this. Okay, if they are willing to go down, they are not going to break this up candle. So the fact that we had this huge move up to break that is telling me that smart money has entered the market. Therefore, a retracement down, I have to find the last down candle prior to the move up. Yeah, this one here, and then another quick move away. So that's your institutional sponsorship there. So once I see this and the break, then we know that they are in. So if you go back onto this one, when did we see smart money come in the market? Here. Yeah, right there. Break above it, smart money is in the market. Okay, let's go back to pound Aussie. So this move down, we want to see smart money in the market right here. Boom, smart money is in the market. So we identified the down candle prior to that, and then we want to go in that direction. Yeah, so that's institutional sponsorship for you. If you practice this, you're gonna see most of the time, okay, if you're right, if your trades are right, there is institutional sponsorship. If your trades are wrong, there was no institutional sponsorship. Yeah, you can go back and check some of your trades and see you could have been buying and selling down here, which is fine. Okay, but when institutions stepped in is when price broke above this high. Okay, so going forward, if you want to see in the lower time frame, it doesn't matter, it's the same thing in the lower time frame. So as I was showing you on Aussie New Zealand, okay, the reason why I said this was institutional elephant in the room was the move away to break this down candle. Okay, price went up, and then if they are willing to continue to go up, this down candle shouldn't have given up. The fact that this down candle gave up with this kind of move, okay, this quick move to the downside, was indicating that smart money was here. So if price gets back to this, I should see a continuation. Okay, so if it's indeed smart money, we should see a continuation to the downside. All right, and that's how we identify institutional sponsorship.